Joining us now, live from our Wellington studio, is the CEO of Z Energy, Mike Bennetts. Thanks for joining us this evening, Mike. To start off with, the Minister thinks what goes up should come down just as rapidly. So I'm wondering, are you going to meet her expectations?
Well, before I answer the question, Lisa, I just want to make it clear that I have to be a bit careful about how I talk about pricing. Clearly, we have been challenged from time to time around comments we make. It's been seen as price signalling, etc. So I want to be as helpful as I can, but I have to be a little bit mindful about the way in which I speak about things. So
understood.
Please be patient with me around that.
Hence the wording of the question. Are you going to meet her expectations in terms of prices coming down just as quickly as you tend to put them up?
So I think what we do is we try to find the right balance between being competitive in the marketplace, giving good value to our customers, and generating a return for our shareholders. And we balance that decision off every day when we decide what happened yesterday and how do we reflect that in prices today. What has been lost in, I think, in the debate or the discussion around the spike that happened in international prices on Monday is we probably, to be honest with you, would have been putting a price increase through anyway because of what had happened in the markets for the week or two prior to that. So it's easy to pick that particular day and say it's gone up, why hasn't it come down by half given what's happened in international markets?
So are you saying the 6 cent jump a litre that came on yesterday had nothing to do with what happened in Saudi Arabia?
No, it certainly had something to do with Saudi Arabia, but we had already been absorbing cost increases for the company we are and the way in which we run it for a couple of weeks before that.
OK, so how much of the 6 cents was down to Saudi Arabia?
Again, I don't want to get too specific on that because that sounds like I'm sort of telling my competitors about my margins, but what I would say is the bulk of it happened before the Saudi Arabia increase. I'm on the record, both in radio and in the print, of saying I thought the impact of the Saudi outage would be sort of between $5 and $10 a barrel, so roughly 5 to 10 cents a litre, and that we would be considering how that played through before we passed all of that on.
Well, by that measure, the significant share of the 6 cents is down to Saudi.
No, what I'm saying is that I expect we had already faced an issue where we were considering a price increase anyway because of what had happened from fuel prices and exchange rates since the beginning of the month.
But your competitor didn't move yesterday, so they would have experienced the same, one assumes, price factors earlier as you had.
Yeah, that's right. And this is, and I absolutely appreciate two things. One, that this is a big thing for customers, consumers. I mean, I've got daughters who fill up their own cars and they complain to me about the price of fuel that they have to pay for. So I absolutely get that. And I also understand that there's a great deal of sensitivity around the way in which things go up and things go down. If I refer to some work that was done a couple of years ago by the New Zealand Institute for Economic Research, where they, a couple of years ago, updated some work they'd done a few years before that provided the evidence that said fuel prices go up as quickly as they come down. Now, as I said, we will do what's good for our business. Our competitors do what's good for their business, and sometimes that means we will be more expensive or less expensive than a competitor.
So would your daughters fill up at Waitomo if it's 30 cents cheaper there?
I know they'd be smart shoppers and they would say, how can I take advantage of some of the loyalty programs that Z offers? How could I earn air points or Flybuys points, and how could I access a fuel discount, which is a standard always on sort of 6 cents a litre, and sometimes it can be as much as 10 or even higher than that depending whether we're having a promotional day or not.
But not 33 cents.
No, I'm not sure where you get the 33 cents from, sorry. In terms of the difference, yeah.
Yeah, in terms of the difference. Because we did a quick scout around yesterday, and two stations within about 2 kilometres of each other had about that difference, and one of them was yours, and it was charging the higher amount, significantly higher amount. So I'm wondering, how can there be such a canyon between prices? Yeah,
so each company will decide to do what's best for them. We operate under a current cost provision, as your earlier segment talked about. We have higher operating costs because we offer services and provisions for customers that a competitor like Waitomo don't, and that's, I think, is great because then consumers can have a choice. If I was to give you an example, we turned one of our Z service stations in the South Island into what we call unmanned, so very much like the Waitomo situation. We did that because we thought that was the way to be competitive in that market. And we've actually lost a significant amount of volume or business from that particular service station. And we've had customers come in and say, wow, I'm really annoyed. I might be able to access cheaper fuel, but actually I can't pump up my tyres, or there's no one there to help me when I need it, or I'd like to buy something from your convenience store and now you've closed it. So that's one of the reasons why the price difference is there, is because it's very, very much a lower cost operation to run a facility that's only focused on fuel without a canopy and with no staff costs.
I get that. I just want to go back to the price movement yesterday. You say some is due to other triggers that happened earlier, some is down to Saudi. Even with only a component of it being tied back to Saudi Arabia, I'm wondering why the price moved so quickly when that petrol that you were selling yesterday would have been in the tanks for how many days? How long ago would you have purchased that?
It's in there for about 3 months, to be honest with you. By the time we buy crude, we process it, etc. Now, what we do is, to the best of my knowledge, every deregulated market in the world, and there are very few regulated markets, but every deregulated market in the world pretty much operates on what we in the industry would call replacement cost, or the current cost, as your previous segment talked about. And one of the reasons that we do that is that when people, customers and stakeholders see a headline on the news that talks about a price change for crude, up or down, they tend to associate that with what their expectations would be the next day. So we don't make any more or less money by running our business this particular way. As odd as this might sound, we think this is more customer friendly because customers get to see what. Well, because they get this is the whole point of this interview. You're saying to me that you saw something, you and many others saw something happen in Saudi Arabia that caused a spike in crude prices. How weird would it be if we didn't reflect that on the day after, or perhaps the day after the day after, but we waited for 3 months?
Some of your customers will think it's weird that you did do that and wonder why you don't start charging them extra once you are paying extra. If you say that the petrol at the pump today was purchased 3 months ago, you got significant amounts in reserve, so why don't you just charge them when you're actually paying more?
Yeah, so again, we'll stick with the Saudi example because I think it's a really good one. How would a consumer, how would one of our customers feel in 3 months' time when we put the price of fuel up based on an event called Saudi Arabia outage?
But you might not have to. You might not have to. That's conceivable that you could still sit where you are, wouldn't it be? Because your competitor, Gull, says that you jumped the gun and that your increase was over the top. Is he right?
Yeah, well, I think, as I said, competitors have their own perspective. Perhaps Gull's owned by a company in Australia that's twice the size of the whole New Zealand industry, so a very, very large company. Perhaps they can absorb that more than we can as a Kiwi company. And
could you not absorb that little bit of Saudi Arabia? You say it was only a small part of that price hike. Given that you were making one anyway, and you say it's a balance between the customer and your shareholders, why didn't you kind of split the difference and only move by 4 cents, not 6 or 3?
So here's the thing. Again, I'll quote a couple of numbers to contextualise it. 1 cent a litre is $50,000 a day for us. So if we said, why don't we split the difference, as you suggest, that would be $150,000 that we were, if you like, behind where we would expect to be for that particular day. Now, at what point do we make that up? Now, over time, we often absorb the ups and the downs. And as I mentioned at the beginning of this interview, we had been absorbing a price increase, i.e. our costs had gone up. We had not passed that on to market for a number of weeks. And this one was just too much for us to swallow, given the type of company that we are. We're a fraction of the size of the people who own Gull.
What was your last year's profit?
Our last year's profit was about 4.5 cents a litre of post-tax.
Give me the top line figure. How many millions did you make in profits?
It would be about $200 million.
Right.
Which is a large amount of money, and that's why I stress it's 4.5 cents a litre of post-tax profit. So and I absolutely understand why people say...
But it's a couple of $100 million, and that's what people see as the headline number. So, and the Commerce Commission has recently said, and I know you dispute this, but your return on investment is 22%, and they say that that's way too top-heavy for profits. Your calculation is what, half that?
Yes, it is.
Okay, so how can you be so far apart? Who's telling the truth here?
Well, I don't think anyone's not telling the truth. I think there's two different perspectives here. The whole idea of the work that the Commerce Commission did and released in a draft report was to enable consultation to take place. So if I was to give you an example of one of the big reasons why there's a difference between the two profitability assessments, is Z bought a company a couple of years ago and we paid $785 million for it. And we paid for what we call supply contracts. So rather than buy an asset, we actually bought a commitment to a revenue stream in the future. And we paid hundreds of millions of dollars for that. The Commerce Commission have said that that has been excluded from their assessment of our capital. Now, your listeners might have heard a word called goodwill before, or intangible assets. That's what we would sort of call that. So what that's effectively saying is of the $785 million we spent, $550 million of it does not count in a profitability assessment. Now, that's a couple of concerns. Obviously, our investors would be concerned that we spent that money and we don't get a return. But equally, I'd be really concerned about businesses, particularly small businesses in New Zealand, that when they sell their business, they have an element of goodwill associated with it. That someone like the Commerce Commission is saying that whatever you pay for that goodwill, any business should not get a return on that amount of money.
The thing that listeners, people who are driving home in their cars now, will remember is the $200 million. They see that you're making a tidy profit and they're asking you to give them a bit of a break. So what's your message to them right now?
I'd give a couple of messages. That's why I think it's important to talk about this in terms of cents per litre. If we gave them a break and said, tell you what, let's halve our profits, that 4.5 cents would be split in two. So you're talking sort of 2 to 3 cents that would be available to the customer. Secondly, at that level of profitability, we would not be earning a sufficient return for us to invest in maintaining our assets. And equally in the issues that we have around climate change today, and I particularly note what's on your website, that how are we going to fund the transition to a low carbon future if we're barely able to cover the costs or invest in the assets around fossil fuels? Z has always been very, very clear that we're committed to reducing New Zealand's reliance on fossil fuels. We want to reduce the carbon intensity of the products that we sell, and we want to be able to be sufficiently profitable, not excessively profitable, but sufficiently profitable that we can afford to do that.
A number of people, we get a lot of texts on this show, and they think that you are being excessively profitable.
Yeah. I can absolutely understand that when you look at the price you pay at the pump and it's
your
$2.
Profits.
Yeah, again, let's contextualise it, Lisa. 4.5 cents a litre. If we were to halve that profit, we would be uneconomic and the consumer would be better off by 2 to 3 cents a litre.
So what, they should just suck it up?
No, they shouldn't. I'd be saying to all customers, they should shop around. There's so much diversity of competition today compared to 10 years ago when I came into this particular company. Now there's a lot more choices for customers. If I was to sort of talk up our own company, if customers used our pumped loyalty program, they get to buy fuel, they can stack their discounts and ultimately earn many cents per litre, if not dollars per litre, off a discount by shopping smartly. And we see our customers doing that, and we see other customers saying, actually what Z has to offer doesn't work for me and I'm going to go down the road. And we think that's really good because consumers have choice.
Okay, so when your customers wake up tomorrow morning, is it likely that the price on the pump will have changed?
Well, I can't make forward-looking statements around that. I'll come back to what I said earlier, is our job is to make sure...
But do you give them a commitment the price will go down as rapidly as it went up?
I'd say we'd act entirely consistently with the way we have in the past, and there has been independent research that says it goes up as quickly as it goes down, and people can rely upon us for doing that.
Really do appreciate you giving us your time this evening. That's the CEO of Z Energy, Mike Bennetts.